Hi, I'm Money with Mark, and welcome to the Money with Mark show. In this episode, I'm going to show you all of the taxes that you have to pay if you're an entrepreneur who creates a Canadian corporation. I've done this as I have created 2 Canadian corporations over the past 4 or 5 years now, I think. And I have learned so much about how to not run your accounting and finances as an entrepreneur, as a corporation in Canada. And so I'm going to show you everything that you need to know as an entrepreneur, because believe it or not, no matter what accountant you hire, they might not tell you about this, and you still have to learn about all of these tax implications. Let's get into the show. So if you are running your business, I highly recommend that you are using some sort of cash flow tracking method. And I recommend using something outside of QuickBooks, because QuickBooks is really, specifically, it's for accountants. That's pretty much it. As an entrepreneur, you don't really need to be in your QuickBooks. You maybe will use a couple reports or use QuickBooks to run payroll or look at a couple reports, but that should be about it. You do not want to be tracking your day-to-day cash flow into something like QuickBooks. So if you want to use something that I use, I've developed a cash flow tracking and budget template spreadsheet. Pulls all of your data from your credit cards and bank accounts into one Google spreadsheet. And then from there, it will automatically categorize as you train it and teach it. And then that way you get the exact data that you need to know, which is how much money in, how much money out you have, and what your balances look like. And that enables you to forecast out your budgets, plan for future expenses, and really automate and give you the exact knowledge that you need to run your business as an entrepreneur. So before I jump into all of the different taxes that we have to pay as Canadian entrepreneurs, I want to tell you about my experience starting a Canadian corporation and all of the struggles that I've had. So when I first started, I was very much bootstrapping. I wasn't out there raising money for a startup. I wanted to bootstrap and really earn my way through the business and use that money that I create from our products and services as a way to fuel our business growth. So because of that, I had an opportunity with an accountant to switch services. I would manage their website and do search engine optimization, which is what my main business does. That's Make Your Mark Today. Believe it or not, Money with Mark, this is just what I do for fun. This isn't my actual business. And so Make Your Mark Today, we do search engine optimization for businesses all across the world, really. And that's what I provided for this accountant. And this accountant said, in return, I'm gonna do your accounting. And I was a brand new entrepreneur at the time, and I was coming in saying, great, I have an official CPA trading services with me, and I'm going to be able to do all of my accounting, or like have them do all of my accounting. And I understood that it was going to take a little bit more work maybe on our end. And so I did actually hire a part-time student in order to work under this accountant and to make sure that like our books on our end were actually categorized properly and done right. Obviously under the supervision of this accountant the entire time. Our first year came and went. It was a really small year when we started up. I think we made like $50,000, $60,000, like super small. And it seemed to work really well. Like in my opinion, when I came in to create a corporation, I was doing it for 2 reasons. 1, tax benefit reasons of owning a corporation. But 2, I knew that as an entrepreneur, if you're self-employed, it takes 2 years of income taxes in order for you to get a mortgage. And I know that I will want a mortgage at some point in the future to get another house, another property, and another rental. So I was planning for that in ahead. And so I said, no matter what, I'm starting a corporation right off the bat because I want to get that corporate data and that payroll data coming in for myself personally so I can get that next mortgage or even get a corporate mortgage too in the future. So that was why I wanted to start a corporation. So the first year came and went, and what I knew is that it was the same as your personal taxes. Like as a business, you had the year go by and then you sent your yearly taxes in and then they told you how much you owed. That's what our accountant did. I was just sitting on the sidelines. Like gave them access to QuickBooks, gave them access to our corporate CRA account, which you had to set up your corporate CRA account in order to get an HST number and business number. So I did that whole incorporation process. Didn't really know what an HST number was. Still don't really. But I knew I needed those numbers in order to have our accountant do whatever they were doing. And so I think we paid a little bit of taxes that first year. I can't remember. And that seemed about it. And then somewhere in our second year of operations, our part-time student worked with our accountant, figured out that we needed to be filing and sending money on a monthly basis to the CRA, the Canadian Revenue Association. and that was for our payroll tax. And so I didn't realize that payroll tax was this thing you paid ongoingly, but yeah, so turns out on top of your yearly tax submissions, you have to pay the CRA every single month in order to pay for the payroll tax. So the net tax that you send either yourself as an employee or to your employees, that total pay will come out of your bank account, but you might send them the net pay, which is a little bit less. That difference is what you send the government every single month. So we had to start doing that. And I wasn't really aware of that. I was like kind of aware of it, but not really. And so it was happening, but I didn't really know it was happening. But nonetheless, I was like, great, something new I learned about another tax we had to file with. And yeah, let's continue with this. Our second year we grew from like, I think 60,000 to like almost 300,000 in revenue. And so that was obviously like, a massive jump for us as a business, which is great. We brought on some more contractors and employees. So that was very exciting. So our books were getting a little bit more complicated, but it was coming up for our taxes for filing for our second year. And I was emailing our accountant. I knew it was tax season. They were really busy, as they always were, but I was getting crickets. And even our part-time student, who was typically the primary communication between us and the accountant, said that she hadn't heard anything either. And so I was like messaging them, like texting them, calling them, sending them emails like every other week. And then it was coming down to the corporate tax deadline for us. And I kid you not, it was 3 days. It was on the Friday, and I think corporate taxes were due on the Sunday night. And she messaged me on the Friday saying, yeah, I'm going to file your corporate taxes again and blah, blah, blah. And like, let's get this done. Thank God I was like available and ready to help her, because it was just so last minute and I was getting like really pissed off and upset. Obviously, because I had been getting zero communication from her. Even if she were to say, hey, really busy right now, like I'm going to get back to you in a couple weeks, like that'd be fine. But I had no notice until 3 days before our corporate taxes were due. And then our corporate taxes came due, and they basically came and said, all of our QuickBooks is like really messed up and nothing is right. And that our corporate taxes were going to be filed, but I guess they were going to be wrong or something. To be honest, I don't understand really what exactly happened. But maybe one of these podcasts, if you are interested, let me know in the comments below. I'll bring on our new accountants to explain what the issues were, why it happened. Let me know if you're interested in something like that down in the comments on YouTube. Or if you are following on wherever you get your podcasts, subscribe, send me a message on Instagram at MoneyWithMark. So those taxes came and they said, we need to do a ton of work on your QuickBooks in order to get it up to snuff, which also really upset me, because why was I trading services with this accountant if they were supposed to be doing this work all along? Like, was this done incorrectly in our first year? Apparently it was. But why was she never checking in on our QuickBooks at any point in the year to make sure that, these were there, it was done properly? She wasn't doing that. Came time to file taxes, and we were like late basically. I think we actually filed them on time, but they were incorrect. And we had to do all this work on our QuickBooks to remediate it. And she gave some information to our part-time student, but they were very confused as what to do as well. But they got done a lot of the work. And then we ended up having to bring on a new accountant to help us with it. Actually, 2 new accountants to help us with it, because our current accountant was like really not very helpful to us at all. So that ended up being like the total bill for just the amount of hours that we had to pay for new accountants to come in and our part-time accounting student to like do more work was probably in the neighborhood of somewhere like 30 grand total of a hit that we had to take that I wasn't expecting. And so that really did not set us up well for success. And that was actually why, and that with a couple other reasons, why our business and myself personally suffered financially because of those mistakes. And as a small business, your numbers are relatively tight. And so having a 30K hit on something like that, like that's 10% of your total revenue, let alone after taxes and costs. So that's a massive, massive hit to a business. So that happened, and I wasn't happy about it, but we got these new accountants on board. They are amazing people. One of them is doing like our bookkeeping work and our ongoing work, that communication with us to help make sure our QuickBooks is done properly. And then the other one just does our corporate taxes only. And the reason why I wanted it like this is because I wanted to have double checks now going forward. Because we had so many issues with this first accountant, I wanted to make sure that there were at least 2 people to verify that the work was done correctly. And so that's why I wanted this double system happening, and that's what we have now. And on top of that, I also wanted an accountant that was a little bit more involved with us, keep us accountable to our financial goals, and make sure that we're operating as efficiently as we can as a business and profitably as well. Later on through our third year, so this is after this big tax fiasco, we're having this massive accounting underworking going on to resolve all these issues happening. So in our third year, our new tax accountant came back to me, and he said, Mark, I got some good news and some bad news for you. And the bad news was that apparently we had not been paying for our GST and HST tax. So me over here thinking, what is this? I thought we were paying this. Like, isn't that the tax that we just filed? And he said, no. So let's keep this in track right now. Right now, there's your year-end corporate tax filings. There is your payroll monthly tax filings that you have to send money to the government on. On top of that, on an ongoing basis, either yearly, quarterly, or monthly, you need to submit your GST and HST taxes to the government and pay them as well. So it turns out like we selected yearly for this, and so that we don't have to do that on an ongoing basis, which is nice. But what this GST and HST tax is, to my understanding, and from what the accountants have told me, is that what we charge in our invoices, we charge, obviously, depending where our client's located, we charge anywhere between 5 and 15% tax on top of whatever our bill is. And then you compare that to your expenses and how much taxes you've paid on your expenses. So if you bought a new computer from Best Buy charges you, anywhere between 5 and 15% tax, depending on what province you're in. And so you take the difference of those taxes, the taxes you've charged and the taxes that have been charged to you on your purchases, and that includes contractors as well, and you take the difference of that, and that's what you either pay to the government or you get as a credit. So that's a long-winded way. Typically, with that GST, HST tax, you're going to be paying to the government because usually your expenses are going to be less than what you charge out because you want to be a profitable business. And so that's why you will actually be paying this GST, HST tax on top of it. So those are the three primary taxes that your Canadian corporation will pay. Again, I pretty much only knew of one of them, and there might be more taxes than just this. There actually is. So if you pay yourself dividends out, there's actually another different type of tax that you have to file at the end of the year and pay in a different CRA account. But that's a story for another day. If you're running a corporation, like a basic corporation, those are the three main taxes that you need to be aware of. And if you want an easy way to see all of these taxes, the easiest way is for you to go and log into your corporate CRA account. And I do this through my personal CRA account. Then you have your business side and you just select what business you're choosing. And they actually have all of those different corporate taxes that you owe in there. So that's where you can go and see all of that different information. So that's a long-winded way of saying, what the fuck? Because if I were to wind myself back 5 years ago, when I was trading when I was trading accounting services for our marketing services, I was really coming in quite blind and naive. And I was coming in saying, great, I got an accountant. Cool. My taxes are taken care of. I got an accountant to do it. Little did I know, they were really only filing my corporate taxes, and they were not taking care of my payroll tax, and they were not taking care of my GST, HST tax. Actually, funny story, they did take care of my GST, HST tax in year 1, and then they didn't do it in year 2. So again, what the hell? Why not? And I actually looked because I really felt like we were being not misled, but really unprofessionally handled as a corporation working with a chartered professional accountant. And so I looked for ways to submit complaints about a CPA, and it doesn't really seem like you can. I couldn't really find much information on it because I wanted to, because I really felt like we were being misled and we weren't really being talked to about all this other information. And as our accountant, she would be able to see that in our CRA account, hey, we owe our GST, HST taxes. Why don't you talk to the business owner and say, hey, why haven't we paid this? And then, we can figure it out why we haven't paid this, instead of me finding out about it 2 years later. So yeah, that's the long-winded story about how I found out about all of our Canadian corporate taxes that we need to pay. The long story short is that I really dislike paying taxes. It's quite disheartening when you see news headlines talking about how little tax small businesses have to pay. And we are, in all intents and purposes, across Canada, considered a small business. But just the sheer amount of adding all of those different taxes, filing that we've paid to the government, it is wild. And especially as we are completely nomadic, digital, entrepreneurial business with employees and contractors all across the world. And, there's no reason that our corporation needs to be situated in Canada at all. It really has me looking and saying, is there another option here? And maybe we can have our corporation be in a better tax advantage country that's not even just better tax advantage, but just simpler and easier to run with. So that has me thinking a lot. I think I'm going to be looking into this more. I have looked into it a lot more, but I'm not ready to come out on this podcast, on the Money with Mark show, and really talk about this corporate tax optimization, if you will. I'm not ready to talk about it yet because I don't have a full understanding about it yet. And that's part of the reason why this episode took so long for me to come out, is because I really needed to get an understanding of what Canadian corporate taxes really look like and how we can handle that as entrepreneurs. So that's where I'm at now. If you are an entrepreneur and running your own business and thinking about making a corporation, just be aware that you need to pay all these taxes, but also be aware that you should be paying yourself through your payroll as well, and you should be paying yourself a healthy salary. Because if you want to personally get a mortgage anywhere, you are going to need to show proof of income. There are ways to get around this by doing like a private mortgage or a B lender or mono lender. And you're going to be paying a higher interest rate, much higher interest rate on those sorts of things, but they do have those products for entrepreneurs. They're really a bridge product, and so they only last for a couple years anyways. And so you do actually need to get approved like after you get that mortgage anyways with like a monoline lender or a big bank. But that's a real issue that you need to look at if you are an entrepreneur thinking about starting a Canadian corporation and you want to get a mortgage at one point. A second point that you need to think about as a Canadian entrepreneur is if you are a female Canadian entrepreneur and you want to go on maternity leave, you need to show an employment history record. Believe it or not, self-employed people, I believe you have to have a full year of self-employed taxes to file. I don't know the exact number here, but you do need a lot more. You need to prove a lot more income, a lot more reliable income if you are self-employed as a sole proprietor to get maternity benefits. And even then it's like kind of iffy. But it's way easier if you own the corporation as a female entrepreneur in Canada and you pay yourself through payroll and actually show that you have a valid T4 from a corporation that you own, of course, but to show that valid T4, which will make you eligible for EI maternity leave in Canada. So that's a really important note for all female entrepreneurs in Canada. So what else do you have questions about for Canadian corporations or Canadian entrepreneurs? Let me know down in the comments, and I look forward to seeing you in the next episode of the Money with Mark show. Subscribe on YouTube, subscribe to the podcast, and I will see you in the next episode. Peace out.